Hello everyone, my name is Mudassir Khan from the Department of Tourism and Hospitality Management at Jamia Millia Islamia. Welcome to the third session on sales budget in sales and negotiation from the Bachelor of Tourism and Travel Management program. And this is the session roadmap in which topics we will cover today includes sales forecasting, pricing strategies, sales volume, cost of goods sold, gross margin, importance of sales budgeting, sales budget in decision making, tracking sales performance, benefits of creating a sales budget, steps and tips for effective sales budgeting. Join us as we explore these important aspects of sales management and budgeting. Let's get started. A sales budget is a financial plan that estimates a company's expected sales revenue over a specific period, usually a fiscal year. This budget is created in conjunction with other financial projections like cash flow, income statements and balance sheets. The sales budget provides the foundation for a company's strategic planning. By forecasting future sales, the company can plan its resources such as staffing, inventory and production capacity to meet the expected demand. It also helps the companies identify areas of potential growth or decline in its business, allowing it to make informed decisions about how to allocate resources and prioritize its efforts. The sales budget is an essential component of the overall financial planning process. It helps the company project its revenue and expenses, allowing it to create an accurate cash flow projection and plan its finances accordingly. It allows a company to compare its actual sales revenue to its projected revenue, providing an accurate measure of its performance. By analyzing the variance between actual and projected sales, the company can identify areas where it needs to make changes in its business strategy. The sales budget also provides insight into resources needed to achieve the projected sales revenue. The company can use this information to allocate its resources such as labor, raw materials and capital expenditures in the most efficient and effective way. Once you have created your sales budget, you can use it to make informed business decisions that will help you maximize your success. For example, if you notice that you are not selling as many tours as you had projected, you can use your sales budget to identify the problem. Perhaps your marketing efforts aren't effective or your pricing strategy needs to be adjusted. By analyzing your sales budget and making changes accordingly, you can increase your sales revenue and improve your profitability. On the other hand, if your sales revenue exceeds your projections, you can also use your sales budget to identify area of potential growth in your business. Perhaps you can expand your tour offering or increase your marketing effort to attract more customers. By using your sales budget to make informed business decisions, you can ensure that your tourism business is successful in the long term. A sales budget can also be useful when seeking financing. For example, if you are looking for a loan to expand your business, you will need to provide the lender with a detailed financial plan including your sales budget. By having a well thought out sales budget, you can demonstrate to the lender that you have a solid plan for generating revenue and that you are a good investment. There are 6 essential elements that you need to consider when creating a sales budget, which we will discuss each in detail. First, sales forecasting. It is a process of predicting future sales based on historical data, market trends and other relevant factors. In the tourism industry, sales forecasting is critical for effective planning and resource allocation. It helps tourism businesses to create an accurate sales budget by identifying patterns and trends such as seasonal variation in demand or the popularity of certain types of tours. To forecast future sales, we will need to analyze historical data such as the number of tours sold in the past and the revenue generated by other tours. Market trends are also important to consider when forecasting future sales. For instance, if there is an upcoming event in your areas that is expected to draw a large number of visitors, you may want to adjust your sales forecast accordingly. Two popular approaches to sales forecasting: the bottom up approach start by forecasting sales for individual products or services such as specific tours or hotel packages. You can then aggregate these forecasts to arrive at an overall sales forecast for your business. On the other hand, the top down approach starts with an overall sales forecast for your business and then breaks it down into individual products or services. As I mentioned earlier, sales forecasting involves predicting future sales based on historical data, market trends and other relevant factors. In a tourism business, accurate sales forecasting is crucial for effective financial planning and resource allocation. For example, let's say you run a hotel in a popular tourist destination. To forecast future sales, you might start by analyzing historical data on room occupancy rates, revenue per available rooms and other key performance indicators. You might also look at historical data on local events such as festivals or conferences that have impacted your hotel's performance in the past. Once you have a sense of how your hotel has performed in the past, you can start to look at market trends and other factors that could impact your business in the future. For example, you might look at data on projected tourist arrival in your area or at trends in consumer preferences for certain types of hotel amenities or services. You might also consider external factors that could impact your business, such as change in local regulations or economic conditions. For example, if a new tax is introduced that affects the tourism industry in your area, you will need to adjust your sales forecast accordingly. Using all of this information, you can create a sales forecast for your hotel. Next is pricing strategy, which is a critical aspect of any business, including the tourism industry. It involves determining how to price the product or service in a way that optimizes sales revenue and maximizes profitability. In the tourism, pricing strategy is particularly important as tourists are often looking for the best value for their money. There are several different pricing strategies that tourism businesses can use depending on their goals and characteristics of their products or services. Some common strategies are cost plus pricing, which adds a markup to the cost of producing a product or service to determine the final price. For example, if it costs rupees 100 to produce a guided tour and you want to make a 20% profit, you might set the price at rupees 120. Value based pricing involves setting prices based on the perceived value of the product or service to the customer. Dynamic pricing, on the other hand, adjusts prices based on demand and other market conditions. Like you might charge higher prices during peak tourist season or for popular events and lower prices during slower periods. Bundling. This strategy involves offering packages that include multiple products or services for a discounted price. Promotional pricing offers discounts or other promotions to encourage customers to make a purchase. For example, you might offer a limited time discount on a particular tour or hotel package to drive sales. The goal of any pricing strategy is to find the optimal price point that maximizes revenue while you also providing value to the customers. Sales volume refers to the estimated number of units or products that a business expects to sell during a specific period, such as a month or a year. This is an important metric for any business, including those in the tourism industry, as it helps businesses to plan and manage their resources, including staffing, inventory, and production. Estimated sales volume involves analyzing historical sales data, market trends, and other relevant factors to forecast the number of units or products that a business is likely to sell in the future. In the tourism industry, this might include estimating the number of hotel rooms or tour packages that will be booked, or the number of tickets that will be sold for a particular event or attraction. To estimate sales volume, businesses may use a variety of techniques, like businesses can analyze their past data to identify trends and patterns that can help them forecast future sales, or by market research to understand customer preferences and behavior and to identify potential new markets or customer segments. They can also consult with experts in their industry or market to gain insights into trends and potential future developments. Self-forecasting models. Businesses can use mathematical models and statistical techniques to forecast future sales. By estimating sales volume accurately, tourism businesses can ensure that they have the resources they need to meet demand and maximize profitability. Accurate sales volume estimate can help to plan their marketing and promotional activities, to optimize their pricing strategies, and to identify new opportunities for growth. By carefully analyzing market conditions and customer behavior, tourism businesses can refine their sales volume estimates over time, helping them to stay competitive and profitable in a dynamic industry. Moving ahead, cost of goods sold refers to the direct cost associated with producing or purchasing the products that a business sell. It includes the cost of producing or purchasing hotel rooms, tour packages, transportation, or other products or services that the business offers. Estimating cost of goods sold is important for any business, as it helps to determine the profitability of each product or services sold. They can ensure that they are pricing their products or services appropriately and can identify opportunities to reduce costs and improve margins. Identifies the direct cost associated with producing or purchasing each product or services. These costs include materials and supplies, labor costs, overhead costs, equipment and maintenance cost. And to estimate cost of goods sold, businesses may use a variety of techniques, which includes historical data analysis, industry benchmarks, and cost accounting systems. Gross margin is a financial metric that calculates the difference between a business's sales revenue and its cost of goods sold. In other words, gross margin represents the profit that a business earns from selling its products or services after accounting for the direct cost associated with producing or purchasing those products. In the tourism industry, gross margin can be an important metric for businesses to track, as it helps to determine the profitability of each product or services sold. By analyzing gross margin data over time, businesses can identify trends and patterns and make informed decisions about pricing, cost management, and strategic planning. To calculate gross margin, a business must first determine its total sales revenue and its total cost of goods sold for a given period, such as a month or a year. By tracking gross margin over time, business can identify trends and patterns that can inform their pricing strategies, cost management efforts, and strategic planning. Overall, gross margin is an important metric for tourism businesses to track, as it provides insight into profitability of each products or services sold, and can inform strategic decision making and resource allocation. As we have discussed, sales forecasting is an essential part of creating a sales budget. It involves predicting future sales based on historical data and market trends, which can help businesses plan for growth and expansion. In the tourism industry, where competition is fierce and factors like seasonality, weather, and natural disaster can impact sales, creating a sales budget is even more critical. One of the primary benefits of creating a sales budget is that it provides a roadmap for achieving sales goals and targets. By setting sales target for a given period, businesses can identify the resources and strategies they need to achieve those targets. This may include investment in marketing and advertising, hiring additional staff, or expanding product offerings. Another benefit of creating a sales budget is that it helps businesses identify potential bottlenecks or areas of concern that could impede growth and expansion. By planning for potential challenges in advance, businesses can develop contingency plans that can allow them to respond quickly and effectively to changing markets conditions. This can help business stay competitive, improve customer satisfaction, and ultimately achieve their growth and expansion goals. To create a sales budget, businesses can use different approaches such as bottom up or top down approach. Another significant benefit of creating a sales budget is that it provides a framework for making decisions about pricing, marketing, and production. When a business creates a sales budget, they are essentially forecasting their sales revenue and estimating the cost of goods sold. Pricing is one of the most important decisions a business can make. It can determine whether a business will be profitable or not. By creating a sales budget, businesses can analyze their historical sales data, market trends, and other factors to determine the optimal pricing strategy. Marketing is another critical area where a sales budget can provide valuable guidance. By analyzing historical sales data and market trends, businesses can identify the most effective marketing channel and strategies. For example, a hotel may use a sales budget to identify the most effective marketing channel for reaching their target audience, such as social media or email marketing. Production is another area where a sales budget can provide valuable guidance. By estimating the cost of goods sold, businesses can determine the most cost-effective production strategy. One of the other benefits of creating a sales budget is that it allows businesses to track their performance and adjust their strategies accordingly. By setting sales target and monitoring progress towards those targets, businesses can identify areas where they are excelling and areas where they need to improve. By regularly reviewing their sales budget and performance, businesses can identify trends and patterns in the sales data. This information can be used to adjust strategies and tactics to improve performance and increase profitability. Creating a sales budget allows businesses to track their performance and make data-driven decisions about how to adjust their strategies to improve sales and profitability. By regularly reviewing and adjusting their sales budget, business can stay agile and adapt to changing market conditions, ensuring long-term success and growth. Creating sales budget also help business allocate resource effectively. By estimating future sales revenue and cost of goods sold, business can determine the amount of resources needed for production, marketing, and other business operations. For example, a hotel may use sales budget to estimate the number of rooms they need to sell in a particular quarter and determine the number of staff they need to hire to manage the operations. Similarly, a tour operator may use a sales budget to determine the number of tour guides they need to hire, the amount of transportation required, and other resources needed to delivering the tour packages. By allocating resources effectively, businesses can minimize waste and maximize profitability. They can avoid overproduction or underproduction of goods and services, which can lead to unnecessary cost or cost opportunities. Creating a sales budget can also help businesses secure financing from investors or lenders. When seeking financing, investors or lenders typically want to see a detailed financial plan that includes sales projection and estimated costs. A sales budget can provide this information and demonstrate to investors or lenders that the business has a well-planned strategy for generating revenue and managing expenses. Now that we have understood the benefits of creating a sales budget and the steps involved in its creation, let's get deeper into each step to gain a better understanding of how it works. The first step is to gather data, which involves collecting historical sales data, market trends and customer feedback. This helps business understand their target audience, what they are looking for and what they are willing to pay. Next, we need to analyze the data to identify trends, patterns and insights that can inform the sales budget. This analysis should consider factors such as seasonality, consumer behavior and competition in the market. The third step is to set goals which should be specific, measurable, achievable, relevant and time bound. SMART. Setting SMART goals helps to ensure that the goals are realistic and attainable. Once the goals have been set, the next step is to create a budget plan. The budget plan should include the estimated revenue, cost of goods sold, gross margin and net income. The budget plan should also consider any fixed or variable costs associated with producing the products or services. And finally, the last step is to monitor progress towards the goals and adjust the budget plan as necessary. This monitoring helps to ensure that the goals are being met and allows the business to make adjustment to its strategy if necessary. When it comes to creating an effective sales budget, there are several important things one should keep in mind. First, it's crucial to use reliable data sources such as historical sales data, market research and customer feedback. You should also take current market trends into account, including changes in consumer behavior, new competitors and economic trends that could affect your sales. Setting realistic goal is also essential to ensure that you don't set yourself up for disappointment. Choose the right tools to help you create and manage your sales budget such as spreadsheet, accounting software or other relevant tools. Involve your team including sales, marketing and finance to ensure that your sales budget is comprehensive and realistic. You should regularly monitor and adjust your sales budget to stay on track, making adjustment if necessary and use historical data to create a baseline for your sales. Regularly reviewing and updating your sales budget is crucial considering external factors such as economic conditions, changes in consumer behavior and competitor activity. Remember to be flexible and open to making changes to your sales budget and set up a contingency plan in case your actual sales fall short of your budget. Finally, communicate your sales budget to all stakeholders in your business, including the sales team, marketing team, finance team and senior management to ensure everyone is working towards achieving your goal. By following these tips, you can create a sales budget that helps you achieve your goals and position yourself for growth and success. It is also important to note that creating a sales budget is just the first step. In order to actually achieve the goals set out in the budget, businesses might have a clear strategy and plan in place for executing on the budget. This includes developing a sales plan, setting sales target for individual sales and implementing sales processes and systems to help them achieve those targets. Another key aspect of creating an effective sales budget is to ensure that it aligns with overall business strategy. This means that the sales budget should not be developed in isolation, but should be closely tied to the company's overall goals and objectives. By doing so, businesses can ensure that their sales efforts are aligned with their broader business strategy and they are working towards the same goal. Finally, it's important to regularly track and analyze sales performance against the sales budget. This helps businesses to identify areas where they might be falling short of their target and to make adjustments to their sales strategies and tactics as needed. By continuously monitoring and optimizing their sales efforts, businesses can improve their overall sales performance and position themselves for long-term success. So, that is it for this session, where we have learned that a sales budget is a plan that outlines the revenue and volume for a business or organization. It is an essential tool for business to plan for future growth and expansion, make decisions about pricing, marketing, production, track their performance, and adjust their strategies accordingly. To create an effective sales budget, business should follow several steps, including gathering data, analyzing the data, setting goals, allocating resources, and creating a budget plan. Once businesses have created their sales goals and allocated their resources, they can create a budget plan that outlines their sales targets and the resources they will allocate to achieve those targets. It is important to regularly monitor sales performance against the sales budget and make adjustment as needed to ensure that the businesses stay on track to achieve its goals. Creating an effective sales budget is essential for business to plan for future, make informed decisions about pricing, marketing, and production, track their performance, and adjust their strategies accordingly. It helps businesses to set goals, allocate resources, and monitor their performance against those goals, providing a clear framework for decision making and ensuring that they are well prepared for growth and expansion. To create an effective sales budget, businesses should gather and analyze data, set realistic sales goals, allocate resources, and create a budget plan. As I wrap up this session, we hope that you are excited to learn more about the dynamics of selling and its techniques. To get deeper into the topics covered, I encourage you to check out the books we have mentioned on the slides. They are your key to unlocking a better understanding of the subject matter. We really appreciate you for attending this session on sales budget. I hope you found it informative and engaging. Remember, if you have any questions or want to discuss anything further, don't hesitate to reach out to me at the email ID given on the slide. Good luck with your studies and future career endeavors. Thank you.